Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is the 2nd of September. It's my daughter's birthday. Yes, I have two daughters, and they're all in the summer, and my son too. But today's my youngest daughter. It's Rachel's 9th birthday. She is 9 years old today. I don't know where the last 9 years have gone. Usually I tell you I don't know where the month has gone. I don't know where this last 9 year has gone. I know I'm about a decade older. But happy birthday, Rachel, and let's get into today's video. And if you want to wish Rachel a happy birthday, send me an email, support@marketgeeks.com, or post a comment below this video. I'll read it to her. It'll be fun. Anyways, it's about 8:04. We've got the biggest report of the week coming out in about 26 minutes. And if the number's really, really high, it may impact the Fed to take action. And if the number is a little bit lower, it may take or cause the Fed to take action. And I'll talk a little bit more about it, but the market's opening up kind of flat, really, really flat. Now, we had a really nasty bleeding week, but yesterday was the first day we got some upside, and I think we're going to get a little more upside today. Let's talk about global economy, but before we do, I just want to give you a number of what we're expecting so you could see what's on the table versus expectations. I know I heard the number 300,000. So as you can see here, the consensus is 293,000. The last time the number was 528,000. That's why today's number is really, really important. I'm more concerned about the unemployment rate, honestly. I want to see if unemployment rate can go down to 3.3% or 3.2%. As far as this is concerned, as the non-farm payroll, I think it's going to hit right around the 300 target. I think the week before or the month before was a fluke. But again, I'm more concerned about unemployment rate, and I'm also concerned about average hourly earnings. I want to see this number go higher, and I want to see this number go lower. We'll get a good idea of where we stand in about 24 minutes. Now let me explain to you why all of this is so important. So, European stocks opened higher Friday, while Asian markets mostly declined ahead of the U.S. jobs data that I was just talking about now, which might reinforce the U.S. Federal Reserve plans for more interest rate hikes to cool inflation. Folks, 0.75 is priced into this market at least two more times. I don't know how else to tell you this. Nothing's going to change that. It's just not going to happen. Investors await figures on August hiring for an update on how the economy is responding to 4 earlier rate hikes to cool inflation. A strong reading, listen carefully, a strong reading would give ammunition to Fed officials who say higher rates are needed to slow economic activity and reduce upwards pressure on consumer. So, if more than 300 jobs were added, for example, it could reinforce further lean towards a rate hike. So again, it's one of those situations where if the number's good, the Fed is going to figure out a way to put a wet blanket on it. Does that sound new to you? It sounds pretty reasonable. So on Thursday, we finally had a little bit of a rebound, if you want to call it that. The market rose 0.3% from a 4-day string of declines. The benchmark ended August with a 4.2% decline after surging the previous month on expectations that the Fed might ease off rate hikes. I have no idea why or where they got that idea from. I think the market rallied based on earnings and then reality set in. That's my personal opinion. Those hopes were dashed last week when Jerome Powell said the Fed needs to keep rates elevated for some time to slow the economy. We know that. It's priced into the market. The only question for investors is how much and when the next rate hike will be. I think you should price in 0.75 at least two more times. On Thursday, Labor Department reported unemployment claims fell last week in another sign of a strong job market. It said earlier this week there were 2 jobs for every unemployed person in the July. So again, if the number's above 300,000, then the Fed may say, hey, we can handle things, and that may actually cause the market. So good news may actually cause the market to falter. But I think the market's overdone, and I'll show you why when we get into the analysis study in a minute. China on Thursday ordered more residents. This is what Jeff was telling me yesterday. I totally missed this. This report usually comes out at about 4:30 in the morning, and I guess this happened in China in China's hours between 5 and 7:30 or 8 o'clock in the morning our time. So I missed it. That's why it's great to have both of us. If I miss something, Jeff has it. If Jeff misses something, I've got it. So it really helps. So China On Thursday, ordered more residents. This was total news to me when he was telling me yesterday this. I was kind of embarrassed, actually. Of Chengdu, a western city of more than 21 million people, to stay home following a virus outbreak. Oh, God, not another one. The area is recovering from power rationing from a drought-depleting reservoirs, but economists said earlier that the national economic impact could be limited because the region's industrial output is a small part of China's total. Okay, all right, now I got it. But I thought, I thought there was more to it than that. But boy, oh boy, not good at all. Now, we are at a crucial level. As I told you guys, the bond market is right here. Now, I think it's going to bottom out around here, and I think we're going to go back up to our base because RSI is really overdone here. But if we break substantially lower, notice the keyword substantially, not just break a little bit below this level, but if we start moving down, kind of like what we were, kind of like this down, that's going to be a problem. But if we continue moving higher and just continue consolidating between the highs and the lows here, let me just give you a better idea. Just show you. If we just continue consolidating between the highs and the lows, back up and down, it will keep the stock market grounded and stable. For example, let me show you Kathy Woods and her ARK fund so you could see exactly what I'm talking about. See that? It's not any different than the bond market. So we got to pay close attention to the bond market. Now, why am I starting to get bullish again on the market? Well, look at the NASDAQ 100, 23.33, 37.27. They're not looking all that apart right now. Most of the momentum has been flown out of these stocks or busted out of the stock. See that? That's what I was trying to tell you. We're here now. That's what the last 3 weeks was. For anybody who listened to me, the last 3 weeks got it right. But I think we're getting lower. And also, I'm starting to see consumer staples above 52%, energy above 81%. Notice, remember I told you everything green here is going to look like this? Well, it's moving a lot more closer. But again, when you look at this, 19%, 23%, 43%, it looks like it could be getting down there already. So I think we're going to pull back from these levels, especially with the NASDAQ with 23% of stocks trading below the 200-day moving average or above the 200-day moving average, which puts us right back down to the base and puts us at levels that we need to rally from. Now, if you look at the stock market, you will see energies and utilities. This consumer discretionary here is out of whack. I think consumer staples is going to come up, but we may be up for another round. On a monthly basis, consumer discretionary is all the way down here. What did I tell you guys 2-3 weeks ago? If you watch my videos, you'll see none of this should be a surprise. And what's the worst sector in a month? Technology. Consumer discretionary, technology. Maybe a little bit more gyrations, but for the most part, I think we're now a lot more stable in terms of where we're at. Right now, you really need to pay attention to the bond market. And let me show you another thing you got to pay really, really close attention to. If you don't pay close attention to this, you're going to be in pain. See the consumer discretionary? It already violated that level. The question's now going to become, is it going to fall deeper into this level? If it is, it's going to impact consumer stocks negatively, or is it going to start rising back up? Right now, that's a question mark, and I don't know the answer to this, but I will tell you this. If the bond market continues breaking lower, this is a fact. If the bond market continues breaking lower, it is going to put more pressure on the consumer discretionary sector. If the bond market starts moving higher, I know I'm going back and forth right now, that'll cause this resistance area or support area now to become support instead of resistance, and will rally. So you've got to look at those two things very, 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 very carefully right now. In terms of the heat map, let me just show you the roadmap here. It's pretty clear. You could see that in the last 5 days, healthcare, utilities, consumer staples, I don't know about this, communication services. Yesterday, again, information technology stuck its head. But look at it over a month. Energy, utilities, consumer staples, financials, interest rate sensitive stocks, inflation sensitive stocks. So we're going to continue going down this road till we find reasons not to. Now, I want to tell you guys something interesting. I'm going to start doing something on Friday. This is the first time I'm going to be doing it. It's called the Algo Trading Corner. And every Friday, I'm going to give you a little tidbit about trading algos. And I think you guys are really going to like this. Now, here's what I want to tell you. When you're trading the markets, and the markets are looking like this, and this is really, really important. It may seem really simple, but it's not. I mean, it's really simple, but it's not simple to practice it. When you're looking at the markets, and the markets are all over the place like this, what happens is you start having second doubts about what trade you should take next, how often you should take a trade. Should you be long? Should you be short? You start getting confused. And when you feel that way, you don't know if you're moving left or right. Now, one of the best benefits of algos, is that algos take all the emotions out of a trade. So to give you an example, just to give you a real simple example, this is volatility. We're looking at volatility right now via the VIX. So about a month ago, I got a signal right here that volatility was too low. Now remember, the market was bearish and I went long volatility. And for a while, things didn't look our way. It went against us, that. And finally, it started moving higher and we actually made out like 7-8% yesterday. We were holding it for a month. But most traders looking at this pattern here would have said that volatility was actually going to continue declining. We were right at the support level. We were coming down. It was a reaction. Market was getting really, really bullish. Remember this? When everybody was buying and everybody said, Roger, the market's turning around. What are you doing? Look at that. Here, we bought volatility. We got into volatility right around here, right before the market started turning. And again, when markets are this bullish, everybody's like, we're hitting the 200-day moving average. Why are you going long volatility? This is not the time to do it. But the system told us to do it, and we did. The bottom line is, when you're trading algo, you're not going to have that emotional struggle in your head. You're just going to be putting trades based on what is happening in the market and what the algo sees. Now remember, the algo does not have emotions, and emotions are the biggest factors that determine whether you'll succeed as a trader or fail. So by incorporating algo into your trading, you can blame somebody else for your mistakes, right? It doesn't really matter. The money's going to come out of your pocket, but that emotional, that emotional burden will be gone, and it's very, very, very important, especially right now when markets are just going haywire. We've incorporated a lot of algos into our strategies and systems across the board, and the numbers have been better. They've been actually quite a lot better. So I highly, highly suggest you pay attention when I talk about algos. And remember, algos are completely objective systems. They don't have to be run by a computer. They can be run by a person. So when I use the word algo, don't think Terminator, machine running things. No, it just means the computer picks the setups. That's all. We still have to give the okay, right? But the computer picks the setup based on a criteria. So instead of just looking at a chart, we have a criteria. Like we know if we do this trade, it'll have a historic win rate of 70% or 80%. And a lot of people are asking, well, that's historic. Does it mean it's going to go forward? Well, let me ask you this. When you're betting on horse races, what do you base on? Are you basing it on the future or the past? When you go to a boxing match, do you base it on the future or do you base it on the past? You've got millions of industries, not millions, but you've got hundreds of industries being based on statistics. And engineers base everything on statistics. The world is a numbers game. And if you don't apply numbers in trading, which is based on numbers, you are making a huge, huge, huge mistake. So definitely follow along what we've been talking about. Jack Carter, myself, we've been picking up on it, and I'm telling you, it's just the beginning. Now, I want to tell you something, guys. Yesterday, I went live with Jack Carter to reveal the exact rules of our new system, the S3 Advantage. And if you like building systems, or if you like using them, then you're not going to want to miss this session. You're not. It's awesome. We even pulled up a list of tickers that the system is signaling and are likely to bounce higher very soon. And we give you the statistical odds of the last 10 trades. I don't know how else I could help you better. I really think you're going to like this system and how it works. I really do. But even if you're not into that, you should at least get the list of stocks. It's a great starting point for trading ideas, and it'll show you how accurate they've been in the past with these algos. It's definitely worth its weight in gold. Follow the link below. Check it out now. Have a good weekend, and Happy birthday, Rachel. And remember, pullbacks. Buy the dip. Always buy the dip. Bye, guys. Emails, comments, welcome. I'll talk to you later. Have a great weekend. Bye.